The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. And don't forget, you can listen to us anywhere online at tfnn.mobi. Let's check out where the markets are at today. We got the indices trying to head on higher. And we got the S&P is currently up about 11 points on the day right now, sort of pausing out there. We'll see if it keeps going. It's like everything is at this critical reversal point right there on the indices. So if they can bust these highs, they may have some more room to grow. But if they don't bust on up, then look for a turnaround on them. We got the Russell right now, 15.5 up on the day right now. We got the NASDAQ up almost 24 points. The Dow sort of lagging behind, only up 38 points on the day so far. Oil is currently down 39 cents. It's been all over the place. And then we got natural gas. It is pretty flat on the day. Corn is down almost 8 points on the day, over a 1.5% move right there. And we got soybeans down 6.75, about 0.5% move on soybeans. Euro dollar currently up right now, 86. That's right, 86 pips on the euro dollar. Aussie dollar currently down 18. Pound dollar up 23. Dollar CAD's up 33 with dollar franc down 61. Euro yen is currently up 38 with pound yen down 28 and US yen down 32. Gold is up almost 9 points on the day right now, and silver is pretty flat and unchanged on the day at the moment compared to settlement. Copper, basically the same story. It's up a little bit on the day, but not back much. All right, so let's go in and let's check out what we got coming up. I'm going to go ahead and we'll get a few things on the screen, get them going for you right over here. So give me 1 second. I'll open this up and we'll look and see if there's anything maybe even on silver that we might be able to take advantage of. And if not, we'll hop on over and look at gold as well and do our little midday afternoon trade. So right over here, there we go. Get that sharing right there for you so you can see it. And we'll scroll on down here, and let's see. Let's bring up gold, silver, drop Aussie off because gold and silver are about to expire. And then let's bring down our expirations to, I'll just put the next 30 minutes to make it easy. And we'll also go in here and raise this up to 65 to 95, both directions, okay? Now that we have our settings, again, 65 to 95, both directions, proximity, you can click in the money, it doesn't really matter because we're doing that with our risk anyway, and then 0 to 30 minutes. And now we can scroll on down here and see, is there anything that looks like it has potential for us? And immediately I see 2 potential gold trades. Not putting them on yet, we're a little soon, but they're going to probably be the strikes that we're going to be looking at. So I can open those up and look at them, get them going right there on the screen. I'll probably we'll pull the short one up, may pull the long one up here in a second as well, and get that one going. And let's see, looking at the 1377, below that the 1371, above that, as potential, again, potential trades right there on gold. Okay, and that may even expand out more. Looks like we're getting a little volatility in the market right now. So sort of flowing in, get a little extra implied volatility. You can see those prices on both sides picking on up. Even got all the way down there to 1371 and even a 1374. So quite a bit of choices that we can look at as we get closer, but we do have to get closer before we hop in on those. All right, so now that we have those up, let me see one more thing I wanted to pull up for you. Give me a second here. There we go. And I'm going to tear that one off. I just want to have everything tore off and ready to go to watch. And you can just you just click on the button there. You get a tear off ticket, and that'll allow you to have that. And then I pin them to the top there so they don't drop behind the window. Makes it easy for me. And then I'll go in here and I'll check out maybe the 2310 as well. Open that one up. right there on silver. And then I got to switch over and look at the contract itself. So, one thing is sort of funny. I get this question all the time. Do I really need charts when I'm trading on Nadex, binaries, and spreads? I'm like, 100%. You would not trade a, call or put on Apple without first looking at the Apple chart. Once you've looked at it, then you'll figure out which one the best one is. But you do look at the chart to make your decision. You don't just hop in and randomly, pick a call or a put. You don't randomly pick direction, and you don't randomly pick the contract. You want to figure out what's the best one, and you need a chart to help you with that. We do have, let's see, looking at here right now, we do have silver looking like it is ticking up. We're going in an upward movement right there. It's pulling down on the current bar right now, so I'm getting a little bit of downtick movement. I like the trend. I don't like the distance. Okay? So that 23.10, like we're at 23.15, I got, 5 ticks to go. That really not what I would say would be my favorite trade at the moment. I am going to keep an eye on it for that 23.10. It's just we are very, very close, and silver can be a little nuts going into its close there. We still have 13 whole minutes left, and that doesn't sound like a lot of time, but that is a lot of time when you're doing some of these premium collection trades. But that's definitely, if I'm, right now, I'm directionally, I'm bullish, but remember, it's not as far as directional, long-term, it's directional, short-term, and so therefore I want to be really picky about them. And like I said, it's sort of doing a little pullback right now, which may make a great opportunity, but I'd rather give up a few bucks in my premium collection and see the market at least heading in my direction before I just hop in that trade. I like to see a little momentum in the right, basically going in the right way. And let's see, so we got that one up, we got our gold ones up, and we'll come back to them, as the opportunity presents itself on what we may be able to do. And I'm going to pull up a couple other charts for us, and I'm just looking at a little more detail, but yeah, right now, just not seeing it quite yet. But that is the contract to look at, so that's the one you probably don't want to be looking at for doing our thing. That's the 23.10, 125. And you can get that one right now for about 80 to, 85 bucks right there, okay? So, let's see here. So that trade, we got that one. We'll check out. We'll see what else we have. And we'll switch over to gold here in a second. But like I said, that one is really close. So if it maintain that up move, we'll have a nice long silver trade. If it pulls back, you got to be ready to hop out if it hits 23.10. Okay? So I'm going to exit that trade if it hits 23.10, if silver does. And one of the cool things that they do on these contracts is they actually will display the price right there in the ticket, the settlement price. And that's the most important price to you. If you don't have access to silver futures, you can actually hop over into your Nadex account over here. Let me show you this. You can go in here, and under underlying indicative, you can go to commodities. You can go to Nadex indicative prices. You go down here to silver, and you can click on the chart, and you can actually look at it. So right there, you can pull that up, and you can actually be plotting silver. And then you can even do a drawing and maybe go and do like a horizontal line, like right at your strike. So like 23.10. So if that's the strike you're looking at, if you have decided to take that trade, you need to exit that trade if it hits that strike. Okay, $23 loss, no big deal. Make it back in a trade or two. $70, $80 loss, 3 or 4 winning trades just to get back to break even. So it's just not worth it. I would rather take the hit and have to take another trade, even if it would have expired in the money, than just get nailed on the trade. Okay? So, just small things, but they definitely add up for you. And this one is really, really close. So, and like I said, it is sort of trending down. So you want to be careful if you are even doing this trade. I'd be doing really light contracts on it. Let me pull a silver chart in here for you, so we can look at this and I can show you what it is I'm talking about. And let's go in right here. We'll pull this up. And there we go. Right there. See, it's like pulling back down on the 1 minute chart. You can see this sort of been oscillating between this area. So we do got a little bit of a resistance line, but it has been hit already a couple times. Back here, it was like 11.30 the last time it hit that price. So there's a little bit of a, I guess you could call that's in our favor right there on that, sort of a very, medium short-term, resistance line. And you can go to see that, a little bit more defined trend. You go to, say, like a 5-minute chart, and you can see, we've definitely been heading up, but then it sort of went flat sidewards going here into expiration. All right, so we got that one up. Let's go on and look on over at gold and see what possibilities are there as well. And again, just keep with the plan. If it goes there, get out, okay? So I have my tickets up. You should have your tickets up. You should be ready and able to do this. So hopefully you're sort of learning to pick pieces of this up, and the scanner makes it a lot easier to go in and basically just find the potential trades. So the next one I want to check out, I want to hop on over, and I want to look at gold. Okay, so now we're going to go in and sort of get ready for a potential gold setup as well. We got about 13 minutes till gold expires. We've got 8 minutes until silver expires. And let me pull that one up over here. We'll look at it right here. See what we got. Okay, so we got our gold contract. We can see sort of a very similar fashion there. It's moving up. We're doing a little bit of a pullback right now intra-bar. And basically the best resistance area we got over here is about 1370, 71. So that we could potentially look at. And let's look at what potential trade. So there is a 1371 for $87. It's about a $13 profit, not a very large profit. It is one that you could look at taking if you're comfortable with that. But, now it's about 14, 15, 16. As it pulls back, probably a little bit more. Or you could decide to go the other direction. Just right now, there's nothing in the other direction. It's $6. So you can hop in these sooner, but if you do, you have more time that you're trying to burn. Okay? And what would be the advantage? Why would somebody hop in sooner, like 30 minutes before, or maybe 20 minutes before, sort of like when the show first started? Well, the reason is you can get more premium. And if you're going to be doing that, if you're going for more premium, say $30 or whatever, if you're going to be doing that, then I would still suggest that you're only targeting, say, like a $20 profit or so. So you get out at 50, maybe buy it back when it hits 10. Okay? So, if you go in, you're like, okay, I sort of see a downward direction bias on this, or I see an upward direction bias on this, and sort of take advantage of that premium that gets sucked out in those, like, basically there's like about 10 minutes before the 15-minute window, I guess you could put. So maybe, how do I put this? It's expiring at 1:30. Between like 110 and 120, you're going to see a lot of premium get taken out of the trade. And then you'll see the final bit of premium get sucked on out right there between 120 and 130. And so there's two ways to take advantage of the premium collection. We'll talk a little bit more about that when we get back from this break.
Says you can't take it with you. TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Trading Hour. All right, so we're looking at the gold contract that's coming up right now. Like I said, that silver contract, very, very close. That one is going to be probably a nail-biter, and if in, most likely that one's going to get a hit. So, because if it expires below that price, then it loses, or at the price. So it has to be above 23.10 on settlement. So those last 2 minutes are very intense. If it is close, you know, one of the things I always teach people on this, if it is close, just get out. Okay, like if it's like right there, like a tick or two away, we were right there in commercial break, it's a tick or two away, just one of the many lessons to learn. If it's way too close, you're better off taking a $10, $20 hit and then making it back on the next round than you are just holding on to it and hoping that it doesn't move down one more tick against you in the next, 2 minutes. So that'd just be way, way too narrow. We got gold. It is moving down right now, so still got these up and pending. Haven't clicked a button yet on the gold trades. Watching them, but like I said, it was sort of moving down. So I like the buy, but I didn't like that it was starting to turn down, and you want to wait until you see that market pop back in your direction. And so if you look at either one of them from the times that we're looking at, you basically have the markets trending down basically since about 110 on silver. So it closed down, and just hadn't had a great one. We did have a nice support line, but they don't always add up, and if they're close, get out. If they hit the strike, get out. And I think this is probably one of the best lessons to learn, and it's probably it is the most important lesson to learn as a premium collection trader, is you want to go in, or any trader, with your risk management plan in place. And risk management has to be robotic. Okay, so what do I do when this happens? And if you don't have that plan in place before you get in the trade, then your mind is not going to be clear enough to take advantage of it. Okay? So again, if you don't have that plan in place before you get in the trade, your mind will not be clear enough to take advantage of that risk management plan. Because what you're going to be doing is going in and trying to figure out what it is that you want to do, and you don't want to be wrong. You don't want to take a loss, and so all of a sudden it becomes emotional to you. And if you don't have that exit plan in place before you start the trade, then you're most likely not going to execute it properly, and you're going to hold on to trades too long. You're going to let them turn into losses. So, a couple rules to make part of your system for, trading expiration premium collection trades. One of those rules is if it hits the strike, bell. Get out of the trade. Okay? Without hesitation. The other rule is about 2 minutes before, and just watch it, you'll see, about 2 minutes before, you'll see the market makers stop quoting. So all you got is other traders from random orders, and other traders will be, hopping out, whatever, hopping in. So you'll see some trades going on, but very little. So the liquidity will become very, very light, and due to that fact, you're going to have a very difficult time exiting in the last 2 minutes. So what should you do? Well, knowing that, if your trade is really close, let's say it's close to break even and you're only a few ticks away, you might decide just to bell on that trade. Okay? If it's like a tick or two away, and maybe you're down 10, 20 bucks, you may decide just to bell on that trade. And I know 10, 20 sounds so small, but when you start doing 10, 20, and 100 contracts, it becomes rather large. So, one of the best, I guess, gold and silver rules, I guess the silver rule of investing that I was taught by one of my mentors, that I'd always wish I have something I don't, as have something I wish I didn't. Okay? I'd always wish I had something I don't, as have something I wish I didn't. And basically, I would wish I had that one that won, as have that one that took a full hit. I'd rather wish I wouldn't have got out, would have kept it and made, 20 bucks, as got out and lost 20 bucks. But so I'd wish that. I'd rather wish that than wish I wouldn't have got out and lost 80 bucks. And so you really have to have that plan in mind. You have to have that thought in mind, and you have to go, if this goes against me in the next 2 minutes, is it worth it? Is it so close that it's worth the risk I'm taking to have 3 or 4 profitable trades for it to turn out to be a good trade for me? And if not, then that's when you hop out of the trade. This is a very style-oriented trade. You have some system, but there's some style with it. But you need to be able to make that evaluation. If it's too close, got to get out. So this is probably the number one lesson on these premium collection trades I can teach you. All right, stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. All right, so one of the things I brought up on the last segment there was I talked about the concept of, the last, 10 minutes you have a premium collection drain, okay? That's sort of what we're doing in this premium collection trades. We're going in like in the last, I say 10 to 15, but really about the last 10 minutes usually. Going in and looking for that premium, basically it's just there's premium in there, there's very little movement required, and if there's no movement at all or movement in the right direction or maybe just a little bit against us, then we can be profitable on the trade. The danger on that trade is more than anything really is the last 2 minutes. Because that's where, if it moves against you, you really have very little room, or really usually little to none, to maneuver. Okay, so you have to hop out, if it's really close to your strike in those last 2 minutes. And that really is a good rule in, all scenarios, no matter what trade you're doing there. But another part of the premium collection drain, and this is something I'm starting to notice, as a trader, trading Nadex and trading anything, you start to notice things the more and more you watch it, is one of the things I've started to notice is it seems like there's sort of 2 rounds of premium collection. Okay? One round will be like, say, 20 minutes before the expiration. So like 20 minutes to 10 minutes before, you'll see stuff at $30. But let's just say the market stays flat, you'll see those same things at like 10 or 15. Okay? On the exact same strike. So let's say the market didn't move at all for those few minutes. Even moved up or down a couple ticks during that 10 minutes. And then at the 10-minute mark, you see the same thing for like $10 or $15. So the concept, okay, the idea that I'm playing with is to actually look at the expiration premium collection around the 20-minute mark, and go in there and look at doing a sell for 30 or a buy for say 70 in the direction of the trade, in the direction of the trend of what you see right then, and with the goal of obviously hopefully it goes in your direction. That makes it even easier. But let's just say it doesn't do a whole lot for that 5 or 10 minutes. Even if it moves a tick or two against you, but it doesn't do a whole lot, then all of a sudden you see that premium just get sucked right out. And all of a sudden now that $30 one is only $15 or $10. And so, well, if you would have went in and sold the thing for $15, the most you could have made is $15 if you held it to expiration. Well, if I can sell the thing for $30 and buy it back for $15, well, I made my $15. I didn't have to wait for that 2-minute dark window in the last 2 minutes before expiration. Okay? And I still could get out at $50, so putting my risk really up right about $20. And I might be able to buy it back for $10. We actually saw, I don't know if you were paying attention, but if you were watching those gold binaries, we saw them, at like around 30.70, and then we saw them like 6 and 10, right up there close to expiration. They were, like, it was, 90, I think 94 or whatever, and like 10. So like they were really, it just sucked them right out, sucked the premium right out of them. And so that's just another, sort of a way to step up the premium collection, get a little bit more premium, which puts me a little closer to my stop loss at 50. Not necessarily closer in the sense of closer to my strike, but closer to, like, if I'm going to buy at 30 and get out at 50, it's a $20 loss versus buy at 15 and get out at 50 being a $35 loss. And it's a very small adjustment, but it's just getting in a little, like I said, look at them about 20 minutes before, look at the direction, demo trade this, try it out, but, sell it like for 30 and then look, put an order to buy it back for, $10 or $15. And then be ready to hop out if it hits, the strike if it hits about 50. And it should be about the same trade, because what you have is you have an insane amount of theta decay happening, okay? So one of the lessons, let me see if I can show you this on the scanner right here. We'll go over to the easiest thing to show this on would be an FX pair. Get rid of that right there. Getting all those resolved. FX pair, and then we'll go in, we'll say, show me the stuff for the week. And I'll just put like 20 to, 80 on here. And we'll also look in one direction just so I can sort of see if we can find some stuff that lines up. Okay, so like right here, I can see with an hour and a half left to go that the 34.20 costs $50, meaning probably that, the pound dollar, if I open it up, is right around 34.20. Okay? So yeah, it's a 34.189. Okay? Now if I look at that exact same strike, see how it's 52. Okay, so that's 4 more hours to go. So we see about a $5 difference in premium. So there's only $5 in 4 hours. Okay? And if we go out further, let's go to the 34.20 right here. We see only like $2 in the next 4 hours. Okay? So in other words, it only lost $2 in 4 hours here, but it lost $5 in 4 hours here as we got closer to expiration. If I go further out, there's only $1 in this 4-hour block. So 52.50, 51.50. See the strike right here. So if you pick up what I'm sort of putting down here, to help you understand the, I guess you could call it the theta decay element of the binaries. But 34.20 at 51.50, 34.20 at 52.50. It only changes, like if nothing changed for 4 hours and the euro dollar stayed exactly where it was, that binary would have a $1 change in value. Okay? If just time passed and nothing else changed. So it only made $1 in premium collection. And then, this is sort of an interesting dynamic. So let's see here. We can actually find out that, okay, so we got that. Then right here, 52.50. And look at this. I can actually buy the 7 a.m. one. And that's really interesting to see. Because that's inverted. It shouldn't be that way. That's basically that's a misquote in the model. But I can actually buy the one that has 4 more hours for $50. So now we actually just saw theta go inverse. Okay? So if that's there, that's probably there due to news that's going to happen between 3 and 7 a.m. So there's something causing that. Because what happens is when implied volatility, this is a whole different lesson, when implied volatility increases, it basically pushes everything towards the center of $50. So there's an increase in implied volatility somewhere between 3 and 7 a.m., depending upon the news that's coming out tomorrow, which we do have some pound news, which will cause some volatility at 4:30 and 6. Not really that much, though. Nothing that's huge. But anyway, so it actually, the model inverts a little bit. And then now that we see a $1 in time decay from 11 to 7 a.m. right there. And then we don't really have a 34.20 to compare that one. All right. So the main lesson I wanted you to learn, I mean, that one will throw you for a loop right there. But if we just focus on the 3 to 11, we had, or right here, 3 to 11, we had a $1 difference. 4 hours passed, price changed by $1. Okay, in time. We got 11 to 7. Then we had right now we have a $3 difference in 4 hours. And now we go here and we go from 7 to 3 and we got, about a $5 or so difference, $5 to $6 difference right now. It was like 5, now it's 6. So it's time's getting closer, okay? So $6 difference in 4 hours. But what's going to happen when we get closer and closer to that time is we'll really start seeing the impact, the decay will speed up exponentially in that last 30 minutes. And what I'm starting to see on the pricing model is that from 20 minutes to 10 minutes, there may be a better, potentially, and I'll keep sharing this as I, go through it with you on the show here, but potentially in that 20 to 10 minute time frame might even be a more ideal premium collection time, as long as you have the mindset of I'm not holding it all the way till expiration. Okay? So like 20 minutes to 10 minutes going for $15-20, and I'll get out at 50, if it goes against me. Because I can still get that same premium crush, but I don't get you almost don't get a whole lot of premium crush in the last 10 minutes, because there has to be some premium in there just due to the possibility of it possibly moving and expiring in the money. So you don't see it usually decay as fast in that last 10 minutes. It'll sort of hold on to it, and then it'll just suck it out like right in the last 2 minutes, which is when they can't even price them, because there's no way to even calculate a probability that short of a time frame away when it's out of the money or in the money, deep versus like right at the money. So it might actually be a better strategy. I'm going to dive more into it myself and keep developing. And all my strategies, what I do is I look at them, I get that piece down, I got it, I find out what are the strengths, what are the weaknesses, is there another way that I can further expand on the strategy to improve it another step, another layer. So hopefully that makes sense. Probably does to a few of you who are following these trades. To you that aren't, it's really cool, and it's really simple, and it's as far as to execute, and then it's just a matter of learning how to manage your risk properly, and being good at like anything at reading charts. So on any kind of trading you're doing the same thing. But this is sort of an optionality type thing without getting complicated on Greeks. You don't even have to look at Greeks. You can just see the change in price. Okay? Let's see here. So that ought to give you the summary that you need right there on understanding that simple concept. Let's go ahead and check out what news we do have coming up tomorrow. Okay? Let's see. We don't really have anything today. We don't really have anything today. We don't have anything tonight that's really worth worrying about as far as till midnight. Now, as far as going into tomorrow morning, we do have some stuff that's going to be kicking in. Got a couple things on the pound. It looks like there's a little implied volatility built in there for that. But, expect maybe, 10 to 20 pips on that. I don't expect anything major to come out of the 4:30 and 6 o'clock announcements on the pound. They're not big announcements. But at 10 a.m., we do have the existing home sales report coming out for the U.S. And so on that report, let me see here. I'll pull it up for you, and we'll go through the stats on that and just sort of help you get an idea on how to put the pieces together. And let's see. All right, existing home sales going to happen at 10 o'clock. There's a few different ways to trade this. Okay, and there's quite a few ways to trade this report. But let's see here. So it's going to come out at 10 a.m. The expectation is 5.15 million. All right, so that's the first thing to know. All right, first thing is when it comes out. Second thing is, what the expectation is. If it came in around, like, say, 5.55 million, that would be very strong for the dollar. If it came in at 4.75 million, that'd be very weak for the dollar. Okay? And so we could go in and we can straddle this. We can strangle it. We can do butterflies before it. We can do butterflies into it. Okay? So there's a lot of ways to do it. One of the ways I want to discuss with you is butterfly into the news. And what is a butterfly? What are you talking about? Okay, so let's check that out. And we'll go in and we'll just sort of, pull something up here. And let's say we were going to do a butterfly into the news on the dollar yen. It basically, in the last 2 years, has not exceeded 50 pips 2 hours after, and the average move is 40 pips from high to low. So what you would do is you'd go in, you put like 65 to 95 on here, you put both directions, and what you do is you try to put together a combination of binaries, maybe the 11 a.m. expiration or the 3 p.m. expiration. I'd rather do 11 a.m. because we see that time decay doesn't really kick in. Okay, so say like you're looking at 11 a.m. and they're even available now, but that wouldn't really do you a lot of good because we're talking about it right before the news. But you go in for the 11 a.m. expiration, and you try to set and you do this somewhere around 10 o'clock or 9 o'clock. Around 9 o'clock, you'd actually go in to do this because you get as much time decay as you can. And as it's oscillating up and down, your idea would be able to get ideally at least a high to low of 40 pips. Now you want to understand that it's going to have a spike, maybe like a 20 to 40 pip spike, probably not even 40, but more like 20 pips spike right off of it. It'll probably hit one of your strikes. We don't exit when this happens, only when doing a binary butterfly into the news, meaning I'm saying it's going to stay, say, between 97.36 and, above 97.11. So let's say like in between those strikes. If I put that trade on, it's sort of a set and forget mentality, okay? Now, I could put a take profit in there, like maybe I sold one at 80 and I bought back at 5, and I bought one at 20, or at 80, and sold one at 20, bought back at 5, and bought one at 80, sold back at 95. I could have like a take profit in there, but I'm really not looking to have a stop loss on this trade in the first 5 minutes, because what I expect it to come out, I expect there to be a spike, then I expect it to pull back, because again, the average range on the entire thing is 40 pips, and it barely ever breaks that. Some other ones you could look at, dollar CAD, 12% of the time it breaks it, but it has a 45 pip range, so it's even wider. Dollar franc, 30% of the time it hits 50 pips, and the average moves is 53 pips. So I would lean more toward the dollar yen. The one other possibility, the only probably better possibility, may be the Aussie dollar. The average range is only 35 pips, but 30% of the time it does break 50 pips. So that stat of how often it breaks 50 pips is obviously much higher, considering dollar yen is at 0% of the time. All right, stay right there. We'll be right back after this break.
Take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Awesome. All right, well, welcome on back here to the Diagnostic Trading Hour. Let's go ahead and check out a few charts, look at some deviation moves on the day. But again, the binary butterfly into the news, you'll put it on above, below, you want that range, and then you really won't close it. Now, after it moves, pops up, pops down, ideally your take profits will get filled because the implied volatility will come out of it. You also can do binary butterflies before the news on certain pairs, and with that basically allows you to go in pretty easily and say, like 30 minutes before, the dollar yen moves about 15 pips high to low. Aussie dollar, same thing. Dollar franc, dollar CAD, euro dollar, 20 pips high to low. So if you can get a nice range there, high to low, 15, 20 pips on that, then that gives you a nice, easy news trade at 9:30 for the 10 o'clock expiration. Okay, so that's one example. And then the move is not just a massive mover. We're looking at about the only straddle I like on it is a euro dollar, and the average move is 50 pips, okay? But understand only 53% of the time does it break 50 pips, which means a lot of times you're going to get like 75, and a lot of times you're going to get like, 25, okay? Like half and half. So just keep that in mind on the straddle on this trade, that you may be a little happier with the butterflies, or you may decide to do a strangled butterfly or straddle butterfly, where you put the straddle on euro dollar and like the butterfly on, say, dollar yen. Okay, but that gives you just sort of a nice lineup. Be aware, of course, FOMC minutes coming out tomorrow and oil inventory report also coming out tomorrow. And let's get some charts up. Let's check out some activity today. And we just had a pretty nice swing. Great turnaround right there on the oil market. I want to pull that one up first. We'll look at it. And it came on down to one deviation, turned perfectly right up to settlement, then turned perfectly again, and basically has moved down one deviation from there. At this point, I'd be calling it quits on the shorts. And I don't know if I'd want to go long. I mean, this is just sort of, if you caught some of the up move and a nice bit of that down move, be appreciative, okay? We just took out a ton of the buyers and the sellers. Orders taken out of the market. We just had massive volume spikes right here on the oil contract. The probability of it pulling back, very, very high, right near that one deviation level. So, basically, I'm done for oil. Okay, just call it. It's important to know when to stop. Okay, and you should have got a nice profit on that thing anyway. Right there, you should be up about $1,000 or so a contract. If you're doing a full oil, maybe 65 to 100, depending upon the size of the contract you used on Nadex. Let's look on over. We'll check out, but again, perfect one deviation moves right there of our applied deviation levels. Look on over. We'll check out gold. Gold had that move on up. We were looking at it earlier, but it moved on down first. And moved on down. Let's see, how below did we go? We got right down there, right to the 0.5, also to 0.7. Went on back up to 0.7. It's basically a 1.5 deviation move from high to low. But as you can see, these were more the spikes. The volume right here, where the market really oscillated at, was at the 2.5 deviation levels. So sort of staying in that 1 deviation range. We'll go ahead and check out silver. Looking at that a little bit earlier. And we got to move on down to 1.5 deviation. I mean, just an insane drop earlier this AM. And then a full pullback all the way. I mean, you could call it a gap fill, I guess, but a pull all the way back to settlement. And let's check out our ags. We'll go on in, look at corn right now. Corn had a nice, look at that, just sweet, perfect move on down to 1 deviation. The list goes on and on. If you haven't been using these deviations for your futures trades, your forex trades, your Nadex trades, binary spread trades, whatever it is you like to trade there, you are missing out. Check it out over on our website. And I will talk to you tomorrow. Stay tuned. We have another great show coming up for you right after this.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.